guess what? I've just used what's called tax flow engineering to get new depreciation schedules. And so the hidden cost here would be not even knowing that that's even an area of return, right? Just thinking it's just the iceberg on top of the waves of the cap gains tax. But no, I got the income tax and I got the depreciation opportunity. And there's two more I'll touch quickly on here. Number one would be estate tax for those that are ultra wealthy, above 30 million, 50 million single. Understanding that above and beyond that, the stepped up basis is not solved for that. That's another piece where I think the 1031 gets overrated, right? It's like, hey, just swap a dewdrop, get a stepped up basis. Well, if you're above those exemption amounts, then it doesn't solve for that. You're gonna hit with the 40% debt tax above those amounts. And the last one, I'd say it's the creditor, right? So the ability to protect your assets because it's protected from creditors, from lawsuits. So that's a big one. Hello, everybody. Welcome to a special Capital Gains Tax Solutions Built to Billions podcast. I'm Brett Swarts. This is Dan Palmer. And today we're actually doing what we do kind of every single week, which is about a 20 to 30 minute discussion on a topic that pertains to capital gains tax solutions and kind of getting granular with some of the most commonly asked questions and or just concepts to look at if you're exiting your large business, real estate, Bitcoin, and you want to know how to be successful. In fact, today we're talking with the 5-step process to achieving success with your large business exit using capital gains tax solutions. Dan, we're preparing for this right now. I have some notes here. My first one is know your goals. So when you're meeting with a business owner, and it could be real estate and it could be Bitcoin, what is the best way that you've found to help to get the dialogue and not just the content going, but more so the mindset in the right place and knowing their goals, because they're going through a lot with this large exit.
Yeah, I think most of it is structuring. Like, how are we going to structure the Deferred Sales Trust to meet their needs, their wants, and their desires? It's impossible to do that unless we actually know. So a lot of people want to jump right into numbers. They want to jump right into hey, what's the sales price adjusted? But we're very interested in saying, what are you trying to accomplish? What's the purpose of this exit? What's next? What's the 5 and 10 year plan? Because once we understand where a client wants to go with the money, do they want to continue investing? Do they want to invest it passively and just have that truly passive cash flow coming to them? Until we really know what they're trying to accomplish, it's very hard to structure it appropriately.
Perfect. Yeah. And I would say one of the questions to ask to help achieve that is, what matters to you the most about your exit, about this chapter of life, about this season that's ending, and what matters to you the most about the next 1, 3, 5, 10 years and your legacy with your financial wealth. So you have these things that are converging, like the ending of perhaps a large amount of your time and your energy focused on something. And second, the future, foundational structuring of your wealth, right? Because oftentimes this represents 80 to 90% of someone's wealth on the large exits that we work with them. And so knowing what you're trying to achieve can then help to move towards success. I agree with you.
I love the flexibility of the Deferred Sales Trust also, because when you're in it, when you've done this long, I call it like paddling out into the ocean. You paddle all the way out and then you catch the wave in and you're like, okay, now I have my exit. I did all the work. I paddled out against all the tides and the waves. And then I had that incredible ride back in and built this business. And now I'm kind of back at the shore and I get to sell it. And I don't really want to paddle back out again. A lot of people in that moment are thinking, I just want to get out. I just want passive cash flow. I just want to, invest the money and just have that check hitting my account every week. But that wears off over time because we work with really high level, motivated, driven people. So maybe 2 years down the road or 3 years down the road, they're like, you know what? I'm kind of ready to jump back in. I felt like I never wanted to jump back in, and now I do. And one of the great things about the Deferred Sales Trust is that we have the flexibility to make an alteration down the path. And I think that's very encouraging for people who don't want to just get stuck in a structure and they're stuck in there for the rest of their lives.
100%. We're speaking about a 5-step process to achieving success with your large business, Bitcoin real estate exit, using capital gains tax solutions. And you may not know what a deferred sales trust is. It's an installment sale with the trust, right? You're selling to a trust in exchange for a promissory note, and that trust ultimately sells it to the buyer, who's ever lined up on that far end. And what happens is you get to defer tax until you receive payment. So that's step one, kind of knowing your goals, knowing what you're trying to accomplish, knowing where you're going, also reflecting on what you're leaving behind as well, and what that might mean for the future for flexibility. I love it. Number 2 I have here is identify and don't tolerate your problems, right? I think this is huge, Dan. When you hear that, what besides capital gains tax, what else kind of comes to mind? The biggest problems, and then the mindset to not tolerate it, right? Or just to give in to, everyone just got to pay the tax.
Yeah, I think maybe, we work with a lot of people that are familiar with 1031 exchange. There's a lot of limitations with that in terms of the timing restrictions and kind of carrying the debt forward and everything like that. And they just kind of think, that's what it is. That's my only option. And, if you tolerate that, you're going to end up way down the road. And if the market conditions change, not necessarily in a great position. And so figuring out, different structures like the Deferred Sales Trust can open up your flexibility and put you in a much better position down the road.
I couldn't agree more. You must replace debt in a 1031. Well, when's the worst time to replace debt? When the market is shifting and going the other direction, especially if interest rates are going higher, right? And which they have the last few years. And it creates this perfect storm that people are getting crushed right now. Right there, I think this ship is going across, this ocean, or this lake, and all of a sudden, this interest rates go up. It's a huge wave. Then you have rents that have lowered. That's another big challenge. You have, the winds of the slowing of tenants, going. This is talking about multifamily in particular. Tenants, leasing units out. And then you have higher insurance rates going higher, and all of a sudden your ship starts to sink. And you're like, what am I doing here? Well, what you really got to figure out, well, how do you get out of that debt, right? And I would say don't tolerate the old way of doing things with the 1031, meaning you have to force yourself in a 45-day window to identify and 180 days to close. Real estate takes 2 to 3 years, sometimes 4 years for the bottom of the market. It's more like a Titanic ship that takes a while to move versus the stock market or even Bitcoin and things that are more volatile. So you have to be aware of that. And the 1031 is not always your friend. So don't tolerate the old 1031, and don't tolerate the debt, which can sink your ships. So I think that's number 2. Number 3 here is diagnose your problems to get at their root causes. So when you hear diagnose your problems to get at their root causes, what comes to mind with what we're talking about here? And let me just kind of tee you up. It's not just cap gains tax, right? I think the deeper thing to diagnose is the income tax, right? So talk about the trust ability to help people also defer income tax for the ultra successful business entrepreneurs that we serve.
Yeah, most of our clients don't really need cash. They're in the middle of their careers. And if you just sell and pay a giant capital gains tax and take all the proceeds, you're still going to invest that money. It's not just going to sit in your bank account. So once you invest it and you earn interest income, you're going to get hit with income tax on that interest income you receive. Great thing about the Deferred Sales Trust is, first of all, first return on investment, I would say, is that you get the full proceeds into the trust. That capital gains tax is deferred, and so it stays with you in the trust. It all gets invested, and as it kicks off that interest income, you're only going to pay income tax on the part of the interest that you actually take. So, it gives you that flexibility to basically look at your lifestyle and say, I don't want to pay all the tax up front. I want it to compound and grow within the trust. Capital gains tax deferred, but also interest income tax deferred until I take it. And then once I take it, I'll pay the appropriate tax.
Yeah, you nailed it, right? And so I think the 2 most expensive things in life that I've heard is they're real quiet, right? What I don't know, the hidden cost of ignorance, right? Just the hidden cost of what could be, and the opportunity cost that you lose out on. And then number 2 is taxes, right? Like taxes are very expensive. And if you break down that second piece of taxes, the most expensive taxes we'll ever pay is income taxes, right? So to the extent that we can defer income taxes, I almost think it's like twice the value of just cap gains tax. Because some people might say, hey, the problem is cap gains tax. And yes, that is part of the problem, right? But underlining that, and really it's like an iceberg. If the iceberg's at the top and the cap gains tax represents 20 to 50%, which is big, by the way, of your exit proceeds being taxed, below the surface is this big, huge iceberg that continues to go down. And the reason it keeps going down is because income tax is even higher, and the ability to compound the deferral of that is such a bigger number. It's just mathematics. And so we'll run these numbers here and we'll diagnose the problem. It's not just cap gains, it's also income tax. And so if I can defer your income tax, gosh, guess what? Like I think 2x the value over even just the cap gains tax. On top of that, I'll add the third one, which is the ability to reset depreciation schedules, which is one of the number one ways and reasons to own real estate, to offset tax, right? Passive, active, depending on your status as a real estate professional or not, and what you're owning, and the depreciation schedules, doing cost seg studies, all of these things. Well, if I'm selling an asset that doesn't have a depreciation schedule, like Bitcoin or stock or a primary home, right? And I can move that to a trust with an installment sale and then use that trust to buy assets that have depreciation schedules, like a business or like investment real estate. Guess what? I've just used what's called tax flow engineering to get new depreciation schedules. And so the hidden cost here would be not even knowing that that's even an area of return, right? Just thinking it's just the iceberg on top of the waves of the cap gains tax. But no, I got the income tax and I got the depreciation opportunity. And there's two more I'll touch quickly on here. Number one would be estate tax for those that are ultra wealthy, above 30 million, 50 million single, understanding that above and beyond that, the stepped up basis is not solved for that. That's another piece where I think the 1031 gets overrated, right? It's like, hey, just swap a dewdrop, get a stepped up basis. Well, if you're above those exemption amounts, then it doesn't solve for that. You're gonna hit with the 40% debt tax above those amounts. And the last one, I'd say it's the creditor, right? So the ability to protect your assets because it's protected from creditors, from lawsuits. So that's a big one. So any other thoughts on that before we go to the number 4 on the 5-step process to achieving success on your next large business or real estate or Bitcoin exit?
No, I think you went pretty in depth on that one. Yeah.
Okay, nice. I'll go to the next one. Next one is design a plan to get around them, right? So I'll go through the process real fast. You're going to know your goals, right? Or know what your ideal outcome is. You're going to identify and don't tolerate your problems, the things that are, in the way. You're going to diagnose the problems to get to the root causes. So go deeper than just the initial level. Step 4 is to design a plan to get around them. So now, we're deferring them. It's a better way to say this. Well, let's design a plan to defer them, although we can't eliminate estate tax. So that actually is getting around the estate tax. And, we sell, we eliminate the estate tax, but we defer the income and the cap gains tax. And so Dan, talk about maybe the top two tips you would say as someone is designing this. What do they want in a team? What do they want in the legal team? What do they want in the trustee, the financial advisors? Like if you were to design it for yourself or for the clients you've worked with, what are the best practices you think?
Yeah, I think one of the main things the clients want is clear communication. They want to know what the fees and the costs and how it all works and the structure, what proper expectations. They say the biggest killer of anything is expectations. If you have false expectations and they're not met in a marriage, your marriage is going to struggle. It's the same thing in business. If you don't know, kind of what is entailed in your deal, it's going to be really hard moving forward. And the second one for me that a lot of clients talk to is just the track record. What is this legal? Am I going to get audited? Am I going to get hammered down the road? Am I taking some big risk? Am I going to be laying in my bed wondering if this is all going to blow up in my face at some point in time? And that's one of the things I love, the fact that we work with Todd Campbell with Campbell Law, who created this structure. He's done thousands of transactions, billions of dollars in sales. He's also defended the audits. I always tell people every tax strategy works until you get audited. And then it has to withstand the scrutiny of the IRS. And the great thing about the Deferred Sales Trust is over that 30-year span, Todd has had over 24 audits that he's handled and defended, all no findings, no change. So I think that gives people a sigh of relief. Like, yes, this is a great strategy, but it's proven, it's been defended, and so they can sleep well at night while they're deferring these taxes.
100%. I love all that. I'll also add, it's good to set an allocation with a team that's going to fit your risk tolerance, your cash flow needs, and your overall investment, thesis and understanding. And that can involve some real estate, that can involve securities, that can involve some insurance, that can involve you doing your own deals. The flexibility of the trust is great for those things, but really having a process, a team, and multiple thoughtful advisors, with the trustee, with your CPA. You really want to make it, you want to be the team, right? You want to make a team approach here, right? So don't want to be on an island. And so that's another thing I would say. Make sure you're working with team players that are willing to work and collaborate in a really meaningful way. And then also understand that you can, and really, I kind of double down on this, you can do your own deals, right? So a lot of entrepreneurs, they hear this and they're like, oh man, I don't want to be capped at 8 or 9 or 10% interest rate. Like I want to make more. I want to do my own deals. You can partner with the trust to go, and you're not capped. I mean, the way we structure it's like a joint venture partnership where you're running the deal and you can get the majority of the upside. It's really powerful that you understand that it's not going to stop the entrepreneur. It's not going to stop the business owner or the real estate investor that wants to go above and beyond just an interest rate on a note and be passive. So, okay, great. So we talked about know your goals, identify and don't tolerate your problems, diagnose your problems to get to the root causes, to go deeper, design a plan to get around them, and in a scenario, defer or eliminate estate tax or defer cap gains tax and income tax. Number 5 is the last one, Dan, and it's implement the plan, right? You've done the work. You've got the clear vision, you've got the team in place, you've got the structuring for what you want to achieve, and now it's just about executing the plan, right? So one of our unique advantages here at Capital Gains Tax Solutions is we've been helping people execute collectively for teams on a lot of things, but myself in particular, since 2006, starting at Marcus and Millichap, multifamily brokerage, now close to, I think we're closing in on about $1 billion worth of transactions, whether with 1031 exchanges, Deferred Sales Trust, we've been parts of Delaware Statutory Trust, real estate transactions and investing. And so that's our track record and our ability to execute, because the timing of this is so important. You need to set it up before close of escrow, have language in the contract that gives you the ability to do this, as well to be able to work with your advisors. One of the things about Todd I also love is that he is an M&A advisor before all of this for Fortune 100 companies, right? So he has sat in the shoes of those who are the largest transactions helping companies sell. Well, guess what? That's what he helped to do, right? Now he's a CPA tax attorney and he doesn't do that any advisory anymore for exits, but he understands that. Likewise with Capital Gains Tax Solutions, for us, we have been a part of and done 1031 exchanges, real estate transactions, and we understand deeply how to do that. I'm still a real estate broker by trade out of California and also licensed in Florida. So these are some of the things we bring to the table, but you want to implement your plan based upon your team and what you're trying to execute. These are kind of the 5 steps process to achieving capital gains tax solution success on your next exit. Dan, let's wrap it up here. Any last words for anyone who's watching or thinking about our services or building a plan here?
Yeah, I would just say, executing on the plan is really our forte. Our team's really good at that. We make the kind of the strategic investment allocation and strategy that we put together, and then when it closes, the investments get made, the payment structure is locked in, and our job is to execute on that promissory note and make sure that the payments are made and the investments are made and that it's cash flowing. And so I would just say that's really our forte. I think a lot of our clients, it seems overwhelming. It's a lot of information. We've covered a lot even just in this little time here that we've spent, but to know that you have a team behind you that's executing on all of that gives you a lot of comfort, because that's our specialty. And so that's what we can do for the client. Yeah. I'll
add one more thing too. It's not just the execution of the actual sale but it's also the execution of the follow-up as well. And just for people who are getting notes for the first time, we have a full team of experts and specialists on our team, or that we're working with the tax attorneys, including full-time transaction coordinator, including full-time DST strategist, and Dan, including myself as a full-time CEO and founder of the company, including full-time operations manager, including a full-time financial analyst, accounting staff, including a controller that helps to control all of the capital. We're working with some of the top advisors in the country with this. We're typically at Charles Schwab or Raymond James for where the capital is at. But if you're listening to this and you're a business professional, we would love to work with you to see how we can connect and work together. But that being said, you want to make sure that they have the team, the man and the woman power to help execute the plan, even post-close, really important. That being said, I'm Brett Swarts, he's Dan Palmer, capitalgainstaxsolutions.com to get started. With an exit, if it's at least $1 million proceeds, $1 million gain, you qualify. We have a book I came out with. It's called Building a Capital Gains Tax Exit Plan. You can find that on Amazon. It's pretty cool. We have Kevin Harrington from Shark Tank in the book and a number of others. You can. It's kind of my journey from learning how to do this, and we try to give you as much of the information that you can learn. But we're here to be your guide. Appreciate you listening or watching. Please share this with someone that could change their exit and help them have success. And we'll talk to you again real soon. Bye now.